Hello traders. Now I want to show you uh, my main strategy for gold trading. It's a little bit, maybe in the beginning it will be a little bit confusing because nobody didn't show you this kind of thing. But the strategy is perfect and working every time. When you met the rules are really simple. If you don't understand something, you always can contact with me and you can ask your questions about the strategy and I will be happy to answer to you. Okay, we have a few rules. Now, we have this boxes here we will call standard deviations. Uh, this uh, this red lines here we will call a buy red line, a buy lines, and this green lines here we will call sell lines. This one, this blue line here, is it's New York midnight opening candle. This is really important, and if you decide to buy this strategy, we will talk about this, why it's important, and so on, and how everything is forming. But let me show you now some examples why this strategy is really perfect and it's working every time. And with this strategy, you can take at least 150 pips every time when you met the rules uh, in gold. Okay, the first rule is that we need to have the standard deviation which is close in the previous standard deviation. You see, the top of the standard deviation is in the previous standard deviation, and the bottom of the standard deviation is in the previous standard deviation. Then, I'm sorry, this boxes here, this is Asia session. This is Asia session. Now, we need to see Asia session to break above or below uh, then. And if we see that Asia session break below the sell lines, the green one, then in between Frankfurt opening and London opening, we start to search for our sell. Okay, this this candle here, this candle here, this red one, this red candle here is Frankfurt opening, and this candle here is is London open. So let's say that you place your sell here. Let's mark this. Let's say that you place your sell here. Your target will be the bottom of previous deviation. Now remember, we have the rules are met. We have deviations inside. We have the price below the green lines, below the sell lines, and we have the New York midnight candle opening below the green lines. So we open our sell and we are looking for 170 pips, and the price just hit it. If you think that if you're more greedy and if you think that the price will contain down, you can just trail your stop or something. I usually don't do this. I'm happy with this. So let's go back and to see some other examples. Okay, this okay. This example is good one. Now we have our deviation inside the previous deviation. We have the price below the sell line and we have the midnight New York opening candle below the green line, the sell line. So we'll open our trade here, somewhere here, let's say. Sometimes, remember, sometimes you can see some drawdown, but you don't need to worry. And I also now I will not show now how you to place the stops, but when you decide to buy the strategy, you will have also a Zoom meeting with me, and I will show you how exactly to place your stops to be safe. Okay. Usually, I don't use stops when I trade, but I know that this is difficult before you start to believe 100% in this strategy. So now we will open our sell here, and our target will be the previous standard deviation, right? It will be here. So on the first day, our sell it goes good, but it didn't hit our target. It goes good for 230 pips. And let's see what's going on. And a few days later, bam, our target is hit. Just perfectly. And from there, the price start to go up. Let's see some other examples. Okay, we have here one buy example, but me personally, I will not take this buy. Why? Because the first rule is not met. We have here this standard deviation, and this one is bigger. It's not closing inside the previous standard deviation. So I will not take this buy because the rules are not met. So let's start from here. This one, we have close in the previous standard deviation. And what we have here, we have the price in the Asia session below the sell line. We have New York midnight candle below the sell line. So we will open our sell somewhere here. This is London open. So we will open somewhere here. We will have some drawdown. This drawdown will be 90 pips, but we go for 500 pips. So let's see how this will work. We said that we will open our trade here in London. We will see some drawdown, and our target will be here. Sorry. On the first day, we didn't met this, but a few days later, our target was hit. This one, but here we have one more signal for selling. Now, here one of the rules is not met also. The New York midnight opening candle is not below the green line, but you can protect your trade, or you can just close your previous trade with 500 pips, and you can open one small one for more 700 100 pips. And let's see how this will work. We open here. And our target is here. Bam, in the same day, 700 pips more, perfectly, without any drawdown on this day, any drawdown. Okay, let's search some more examples. I hope, okay, let's see some buy example. This is not working only on sell, this also work on the buy side. On the buy side of the price. Now, what we have here, we have deviations inside the previous one. The price is above the buy lines, red ones, and the 5 o'clock midnight New York opening candle is above the previous is above the buy lines. So what we are going to do is this is London. Okay, let's say that we open somewhere here. We will have some drawdowns of 75 pips, but our target will be here. It will be 190 pips. So let's see. And this is almost every single week. Maybe 1 week per month. The price don't give me setup, but 3 4 weeks per month. It depends on the month, how long it is. The price give me a setup. So we open here, the price make a little bit draw down, and then bam, it hit our target. We take our 190 pips, and we are happy. Let's see some more examples. This one is good. We have only one, which is not okay. The midnight opening candle. It's below the buy lines. But I told you, when you met this kind of condition, you can open smaller size of smaller lot size, and then I will teach you how to place your stop and where to place your stop. So here we have, let's say that we have made rules. We will open our trade somewhere here, and we will go for 230 pips. It's completely enough for 1 week, I think. Let's see this. We said that we'll open somewhere here, New York, and our target will be here. Bam, on the next day. And the price is contained. And here we have one more signal, but a lot of rules are not met. So let's say that we will not take this trade. But for this week, we have, how much for it was 200 pips, I think. For this week, we have 230 pips, which is completely enough every single week to do this kind of money. I think is perfect. We have here a great sell opportunity. You see this absolutely perfect sell opportunity. The conditions are met. We have here the previous the standard deviations are in the previous standard deviation. We have the price break below the sell lines, green ones, and we have midnight New York opening candle below the green lines. We open our sell somewhere here, let's say, and our target will be on the previous for 280 pips. We open here. We have a little bit drawdown here in this example for 54 pips. But our target is here and we are sure in our strategy, and bam, this is it. And we are done for this day. So guys, there is every single example is is it's the same. I can go on and I can go on and on and on, but this doesn't make sense. So I will show you the last example. This one here, it was perfect. Everything is met here, and we will open our trade somewhere here. We'll open our trade somewhere here, and our target is here. Bam. How many pips is this? 270 pips. This is it. Perfect. So if you like this strategy, just contact me, and if you have questions, I will answer these questions, and you will be allowed to make money on the market every single week. So just contact me, guys. Cheers, and trade safe.